May profits be upon you. Welcome to another weekly market forecast. I appreciate you guys tuning in each week, and I'm going to try and get my analysis out for the week ahead. This week's going to be a little different insofar as uh, I'll be putting out some more videos during the week because market has been kind of hard to observe really as of late. If you look at the fundamentals, the news, all right, we're looking at economic news. Matter of fact, let's start off with that. If we look at the economic news coming up this week, Monday is going to be a bank holiday for the CAD, but it's not anything, no red folders on Monday. So that'll be a day where you might see the market kind of move a little wonky, maybe a small range and all. Not the most favorable market conditions, right, to trade in. Tuesday, we have some more red folders for the Aussie dollar. They got a interest rate decision to make. So wait, I would suggest you wait until after that news before you start trading Aussie dollar. All right, because that could reverse the markets. Interest rate decisions uh, pretty pretty important. The CAD has some news, red folders. The pound on Wednesday has some folders, CPI for both of them. All right, that's some good juice going in to good liquidity to go into the markets. Right, Thursday, red folders for the euro, French related to France, and euro for the German and for Germany, and the pound. Yeah, U.S. dollar. We have some unemployment claims. That'll be pretty good. Some good juice. Friday is also some more good juice. So it'll be. It shouldn't be as rocky. We don't know what Mr. Trump is going to be doing or saying or whatever. But if we think about the news and how it relates to how it impacts our trading, uh, we need to make note that Moody's uh, downgraded the U.S. Credit rating from AAA to AA1, which is a step below, and it's in line with the other two credit agencies. That's not good news for the U.S. dollar. All right, that's actually a catalyst, a bearish catalyst. So, if there is uh, a bearish catalyst going on with the U.S. dollar, you probably can expect some uh, movement upwards in the equity markets. Now, watch this. All right, let's take a look. We're looking at the weekly. I want you to bear in mind during this analysis, we're probably going to be referring to the 4 hour, uh, what do you call it, charts a lot because the market is moving like this. All right, and inside of those movements, we got to take a closer look on the lower time frame. So just bear with me, okay? So what we have here on the S&P, we're looking at first. We have this bullish movement up until the year. Uh, to the beginning of the year of 2025, and then we have a push down, and that was until April, and then with tariffs and everything, and now we have this bullish movement, a bullish recovery. We're past the recovery mark, all right, because we had a drop here when those tariffs were announced, the beginning of the war, the Freedom Day, and all, and the markets just took a dump, and then we see the recovery happening, and I'm looking at that high here where the market last week closed above that swing high. That's very bullish. Another bullish sign, let's take a closer look. Another bullish sign is the fact that there was a bearish fair value gap here, all right, that price closed above. We traded into and closed above it. That eliminates it once it's been used here. This was where the first tap of that uh, bearish fair value gap was, and you can see the drop from there, and then we recovered behind it. So we have some very bullish indications here, okay? And the fact that we closed above that high is pretty remarkable. The the bearish fair value gap is an internal range liquidity. So if the market is not going to offer fair value, it has already offered fair value at that internal range liquidity. We look at uh, uh, order blocks, okay, and what we have here is some sell to buy here. This is where we are right now in this area, this supply area here, but prices close very strong bullishly inside of that. So I'm looking for further upside action there. If we go to the daily, you can see, uh, since last week, it's been bullish, right? Small ranges, but price keeps climbing. All right. And where are we at right now at this opposing uh, uh, candle, where you can expect maybe price may respond to it. It could be a speed bump. But what I want you to notice is that those highs above it is buy side liquidity. All right. And this little thin slice of a bearish fair value gap is a weekly one. All right, isn't it? Yeah. From that low to that high, we have a bearish fair value gap. I think that will be the draw that brings price up. We have relative equal highs above it, but that'll also draw price up. So that's one of the reasons why I'm looking at prices climbing. We also have a bullish fair value gap that was tapped into here, and you see how price respected it, pushing higher. So I am also looking for an expansion candles that'll allow me to think, yeah, prices are going to continue higher, that we have the structure for higher prices. Also, there is a bullish fair value gap right up under here. All right, so that price can use it if it does turn around bearish for prices to continue to climb, and this would be a higher probability trade to take longs from, as opposed to taking longs from here. All right, I would love to see price react to this bearish pattern here, this order block, and tap into that fair value gap, that bullish fair value gap, and then continue to climb higher. If we look at the NASDAQ, we have the same situation, except the bearish fair value gap that was created on the 24th of February. You don't see that. You see, this is the 24th of February candle. It didn't, that fair value gap isn't as prominent there, but there is one in that area, right? On the S&P. Here, uh, it's on the NASDAQ, very prominent because it's a little weaker. The NASDAQ is a little weaker. However, I do believe like I keep repeating, the older fair value gaps tend to act as speed bumps where price will react to it and then continue higher. So we have this expansion candle here. What am I expecting? A smaller candle for Monday, and that creates a bullish fair value gap that price could use for higher prices. All right. We have a buy up before a sharper sell off. This is where supply is, and that's what we're tapping now. Let's see how price reacts to it. All right. Maybe we come down to fill this bullish volume imbalance here. All right. And well, it's a volume imbalance, and I don't want to call it bullish or bearish, but usually price tends to react to those things. And if it's in an uptrend, yeah, it'll react uh, as support, and it could react as support. But we'll see how price reacts here. Once it hits that bearish fair value gap, I'm looking for price to maybe react a little bit and continue higher. Uh, the Dow, we have a bearish fair value gap in the same area, same time frame, same kind of time period. All right, but I believe that price is heading higher. That's why we have this bullish volume imbalance here. All right, where price gapped up like that. All right, I believe this high and this high. Oh, the draw on liquidity. That's why I have that red line there into that bearish fair value gap. I believe we'll hit it, react to it, and then continue higher to this high here. And let's see if I can get that right. All right, to then maybe we'll continue higher to these relative equal highs up here, because I believe that's where we're heading. And I'm looking for expansion candles that'll give us those imbalances, the fair value gaps that it could use to go higher. All right. If we go to gold, I got a little message on here. Gold fell mid-afternoon on Friday, easy as Trump was making deals over there in the Middle East. All right, and you know, forgiving sanctions and all, Syria and everything. So that will bring gold down, because nobody needs to head to safe havens. They'll take money out of safe havens like gold and put it into the markets, the equities, all right, and or riskier assets. So that's what happened here last week. That's why we have a bearish candle there with a bearish close. However, we do see how it respected this daily fair value gap. Now we're on the weekly time frame right now, but on the daily you will see that there was an expansion candle here. It's an old expansion candle there, but this is an area of fair value that price sold but had a stronger buy up, right? And left that area of fair value. We waited for price to come back to it, and we have a two candle contact here, one going in, one coming out. This one on Friday was a bearish candle, but you see how it showed respect to the fair value gap area, right? To the area of fair value here. So I am looking for price to open and possibly continue to go higher. I'm looking for longs in gold. All right. I was looking for them last week. All right. We got a hint of it. But when Trump started to talk about Syria and all of that kind of stuff over there with the deals and everything, things started to, the tension started to ease, and gave a bearish candle. All right. Do I think that bearish candle? Look, as long as price is above that low, all right, as long as price is above that low, I'll be looking for longs. All right, I'm going to start looking for longs. I would like to see price take out these highs as a draw on liquidity and head up towards this volume imbalance here, that gap down to fill it. All right, these act as draws, and I'm looking for reasoning to some confluence of price moving for price move to move higher. Okay, we'll see how it goes this week. Silver, not in love with silver. You see how it's been knotting up, moving sideways here? Not in love with that. But what I'm going to take note of is these descending highs here. I think price is going to be drawn to it as a draw on liquidity, a liquidity target. All right, because we already swept the range low here, right, on Thursday. All right, so there's good reason to think that maybe price doesn't need to keep going lower. All right, because we've already swept the range low. Now we can come down here, so certainly we could. All right, but I'm thinking that price is probably going to find its way up higher. If I peek at the 4-hour on this, you can see that price has pushed down, pulled up, get about, you see that bearish fair value gap here? All right. We've ran into that fair value gap with bullish fair value gaps and expansion candles along the way. This is the retracement. We kept that low. As long as that low is protected, I think we're going to continue higher to take that high out, these highs out, these highs out. I think we're going higher in silver. We're going to see now if price closes below that low and goes into this area over here, this area of fair value that has already been traded into. I think we're going to be continuing to go low. This is where I would start if I get a close below that low, a close on a daily closing basis. That's when I will start to think bearishly and looking for sells in what do you call it? Silver. Okay, and tell you what, we're going to take a look at oil in this market. All right, if we go to oil, look at the weekly. All right, you can see. Matter of fact, on a monthly basis, I got to go through this quickly. Uh, on a monthly basis, you can see that wave come down, had a V-shaped recovery. I was looking for price to maybe push down a little bit and then continue higher. All right, but we have been sideways here. All right, that in itself is kind of, it just makes trading difficult because price can turn at any given time. But we have the draws here. We have price uh, uh, sweeping the intermediate highs before descending down to the range lows. We haven't reached the swing low yet. We've come down to the range lows, and then we have this pop here. Uh, uh, this is in a month that is continuing. You know, we still have a couple of weeks to go in this month. All right. If we go to the weekly, we can see we had 2 weeks of price moving bullishly. All right, after a bearish move to the downside, right? A very bearish move. We hit it once, and then we pushed, we retraced, and then we hit it again, but we never took out the low. Never took out the low. Is that a protected low? It seems to be. So price pushes up. All right, I'm looking for price. I would like to trade this, but I am only interested in shorts. I'm not looking at. I don't want to look at longs. All right, because we're still making lower lows, lower highs, lower lows, lower highs. We haven't made a new lower low, but we haven't made a new higher high as well either. All right, but because uh, that's what the trend is, I'm going to stick with that trend. If we go to the daily, what we can see is we had bullish fair value gap, price pushes back into that bullish fair value gap, and you see we have a bullish reaction. All right, it's using it for higher prices. This is why I have these lines here. All right, those buy side liquidity targets. I'm looking for prices to take out those buy side liquidity targets and then make a bigger move to the downside, sweeping these lows. That's what I'm looking for. Okay, so when I get above those lines, if I can get to the 4 hour before time runs out here, all right, what I'm looking for is for price to give me this pattern: a high, a higher low, a higher high, and then a lower low, breaking this line here, this low here, and that would be the market structure shift, a shift from bullish, sorry, from bullish to bearish momentum. Okay, and that's what I'll be looking for when it crosses this high, these highs here, which are relative equal highs, and if price continues higher, then I'll be looking for that pattern here. This is the way I trade. This is the way I trade. All right. I don't think it's going to continue higher to 65 or 66. I don't. All right. There's the possibility that it could, because there is a draw on liquidity up here in the form of is that a weekly fair value gap? No, it's actually, I think that's a daily. All right, a daily bearish fair value gap that could definitely uh, put price above this. But this is where I think that price is where we could take a very high probability trade to the downside. I do. So if this is part of the correction of this move, all right, where it continues up higher, I'm waiting for price to give me that high probability trade to the downside from up here. Yes, you can take short-term trades up if you choose to. I don't choose to. I think that'd be dangerous because it can turn around on you. All right, so that's it. All right, that's it. I hope you enjoyed the market analysis. Make sure you hit the like button and I will see you in the next video. Thank you for watching.